Hello, investors and traders, and welcome to the weekly market report with the Market Guys. I'm AJ Monty. This is a one-year daily candle chart of the Qs. This is basically the exchange-traded fund that represents the NASDAQ market. And if you've been following along each and every week, you'll know that I leave my lines on the chart so that you can see the evidence behind our forecasts and how accurate technical analysis is as a forecasting tool. And last week, you have to understand that none of these candles were on the chart. And basically what I did is I drew this diagonal line down. I'll zoom in a little bit more because it's hard to see against the red. But I drew this diagonal line down saying the market will most likely go down to fill this gap right here. And then I drew this pivot point signaling that we would most likely bounce after that gap was filled. Now, again, this is evidence. This is not my ability to see into the future. I don't have the ability to predict the future that way, but I do have a certain skill that I teach people with regard to reading the charts. If you could learn how to read buy side and sell side pressure, you too can forecast the markets just like I do each and every week. So what happened? The market went right down. It was almost as if it was following my lines, went right down, filled the gap. Today we began the pivot point, and look at that. We closed right at the end of my line within a penny of that target, which is the end of the line there. Now, one very important thing that I want to point out is that yesterday right here, which is October 15th, we closed with a bullish engulfing pattern. And if you look down at the bottom of the chart, you'll see that the stochastics oscillator is starting to turn up from an oversold condition. So that's very bullish as well. My forecast is simple. Next week, we have a shortened trading week because of the Thanksgiving holiday. And we have some very important numbers that come out on Friday. Some of you may have heard of the Black Friday, which is the Friday after Thanksgiving. This is the busiest shopping day of the year, and it's now become an economic leading indicator. And then following that is Monday, which is Cyber Monday, and I imagine there's going to be all kinds of online sales as well. So those are two numbers we want to pay very close attention to. I think the economy is strong enough to support a year-end rally. And so what I'm going to do is I'm going to draw this line. I'm actually going to go a little bit steeper than I did last week. And I think that we could make a move to fill this gap up here. So that gap is going to be my target price for the short-term price action. So keep an eye on that. We are very accurate in a forecast. And this week, we're 100% accurate. And I'm showing you the evidence right here on the charts. Now, if I go to the VIX, this is a leading indicator that is a contrarian leading indicator to the S&P. Again, I'll zoom in so you can see what my forecast was. Remember, again, these 5 candles were not here. This was Friday from last week, and I drew this line just like that, and I said we would move up with the end of the line being my target, and I drew this line as a gap fill resistance area. Now look at that. Market went right up to fill the gap, came down, and now it looks as though the VIX is turning lower. Look at the stochastics there. I'm going to even forecast the stochastic and saying that it's going to close lower at the end of the week, which will eventually cross the red line, creating a sell signal for the VIX. Now, I know I tend to be a little redundant here in my forecast because I want to make sure that I'm getting the point across. Whenever you see long shadows above a candle, that is bearish. And now that we've hit our target and filled the gap, there's an 80% chance that we're going to go lower. Because if you're following my rules for gap trading, you'll know that 80% of the time gaps fill, and on the VIX, it's closer to 100%. And then after the gap fills, there's an 80% chance that the price will reverse. And again, we're seeing that right here. So I'm going to leave this in place, but I'm going to extend this downward trend line for the VIX because I think the VIX will drop from here, ultimately finding a role reversal support level right there. And that's why I ended the line right there. So again, if the VIX is bearish, the S&P is bullish. So let's go to the S&P. This is the Spiders. It's the ETF for the S&P 500. And you can see going to the bottom of the chart, I'll start at the bottom. Stochastic is turning higher. That's bullish. We filled the gap here. Now there's an 80% chance the market will reverse. That's bullish. We have a green candle here that has a higher low and a higher high. That's a pivot point. So we are bouncing off of this gap fill support level. And so what I'm going to do is draw my forecast for the S&P. Just like that. I do believe we are going to break out over resistance on the S&P because, again, I believe we're going to start that year-end rally right up until the end of the year. I think we might even make a move to go for these highs back here, and I'll even draw a line there for you so you can track that. Now let's keep moving along. Let's go to the Russell 2000, which is a more broad-based index. Obviously, this one tracks 2,000 stocks, and I said the market would go down and bounce. What happened? The market went down and it bounced. And the stochastic is also turning higher. That's bullish. I'll forecast that as well, higher next week. And because it's a shortened trading week, and today, as I record this, it's options expiration Friday. I don't know if the option traders are aware of this, but the week after options expiration Friday is usually the most volatile of the month. So combine that with a shortened trading week, that could actually add to the volatility as traders try to squeeze in their trades before Thanksgiving holiday. And so I'm going to, again, forecast the Russell 2000 to go higher. I'm just going to erase these lines because we already hit that target, and I will just draw a new line for you to make this clean. So I think the Russell 2000 is going to move up, and I do believe it's going to break out of that high right there and test this high right here. So we'll have to see if resistance holds and we pull back, or we just blow through it in that Santa Claus rally. So the diamonds, if you look here, that is, again, 100% accurate in the forecast. I said we would go lower to fill the gap. It filled the gap. It held support. It bounced. Now what happens is the stochastic, if you notice, it's right across the board. Stochastic is turning higher. And eventually, again, these will move up to cross the signal line right there. So my forecast for the Dow is going to be higher. Let me remove that and just draw it just like that. The Dow might have a little bit of resistance up here, but I think we'll pull back a little bit after we hit that target and then again rally up to test this high all the way here. I'm going to leave all of these lines on the chart for next week so you can see, again, the evidence and how accurate technical analysis is. And if you're interested in learning more about what we do with the Market Guys, this coming Monday, the 19th, I'm having an open house Q&A session. Just go to themarketguys.com, click on the Register Now link right there, and it'll bring you to the registration page where you can reserve your seat. It's free, and I invite everyone who is even remotely connected with the stock market so we can show everyone how great technical analysis is. And if you're interested in learning more about what I've talked about with the gap trading strategies, you can go to our video page, and I have a very short video called Trading the Gaps. I'll zoom down here so you can see right here, Trading the Gap right there. It's a 6 to 7 minute video. It'll explain to you in more detail what I just mentioned on this report, and you'll know the 80-20 rule for gap trading. So that's it. Have a great weekend, and we'll talk to you on Monday. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.